Hello, I'm Natalie MacDonald and you're joining me in Sydney, Australia. Now, it is sometimes easy to forget that Australia is that gateway into the Asia-Pacific region. But between QE stimulus programs, slowdown and snap election, there's plenty going on at the moment. My guest, Ric Spooner of CMC Markets today, is going to be talking about Japan, China and just how this is impacting Australia's economy also. Ric Spooner, thank you very much for taking the time to chat with us today. Much appreciated.
That's a pleasure, Natalie.
Okay, so Monday's Japan GDP figure was considered to be a make or break for that snap election decision. Which way is today's result likely to send decision makers?
Well, as you say, a lot of speculation and discussion, possibly well-sourced rumour about the possibility that a weak figure today would send Japan to an election. So if those rumours are well-founded, then the figure certainly means that an election is on the way. It was surprisingly weak, a decline of 1.6% over the year compared to market expectations of 2.2%. So from a market point of view, I think this reinforces the consensus view that Japan needs more than a central bank monetary stimulus to improve its growth and inflation levels. It also very much needs structural and fiscal reform, and today's GDP number just underscores the need for potentially Mr. Abe to go back to the people to get a mandate for that sort of reform.
You touched there on stimulus, and the Aussie dollar was up against the Japanese yen in last week's trading at a pretty consistent rate really since the announcement of that stimulus package last October. Does this complicate the Aussie dollar picture somewhat?
Well, look, in a way, it just reinforces the recent direction, I think. Certainly we're getting a fairly clear division now amongst a lot of the G10 countries, with Europe and Japan being consistently at the weaker end of economic growth. When you look at, say, Australia and Japan, a lot of this is about population growth. Japan is expected to see a decline in its workforce of around about 0.4% per annum on average in coming years, where in Australia, on the latest figures, our population grew by 1.8% in the year to March, and around 60% of that from net immigration. So Japan needs to introduce productivity reforms if it's going to grow. But at the moment, and unless and until that happens, the likely trend of yen weakness against other currencies may be with us for some time to come, I think.
Now, looking for a moment at China, is Thursday's manufacturing PMI data likely to be under further scrutiny of signs of that slowdown, particularly if we consider the Australia-China Free Trade Agreement discussion?
Yeah, well, look, of course, for traders, China is one of the fulcrum economies in the world, is always under scrutiny, and Thursday's manufacturing data will be no exception to that. The background for the general run of data we've seen from China recently has been a little bit encouraging, really, from the export sector. Good to see those exports growing by a bit more than expected. But on the other hand, some ongoing signs of weakness in the domestic economy, and that's translated into a bit of a softening still in overall economic production, which is just caught in that 7 to 8% band. So the market's going to be looking at this PMI figure to really assess whether that remains the case. The expectation is for a figure just above 50, which would be consistent with that sort of 7.5% industrial production growth.
Now, bringing it back to currency, lastly, we've already spoken about how the Japanese stimulus program is prompting gains in the Australian dollar, also the US dollar to the detriment then of the Chinese yuan. Could we be seeing a shake-up not only in the Asia-Pacific currencies at present, but G10s also?
It's possible, I think. If the trend we've seen going and the difference between the growth in economies continues, which I think is likely for quite a while, we could see an ongoing upward adjustment in the US dollar. Now, no doubt we'll have corrections along the way, although they've been few and far between recently. But generally speaking, the US economy is pretty self-reliant on its own domestic economy, and it can stand quite a large increase in its own currency before it becomes really painful as far as its own economic growth is concerned. And as you say, that might carry the yuan, which is linked to the US dollar, into uncomfortably higher territory. So we'll just have to see what happens. But that sort of dislocation is certainly a possibility for the future.
Ric, thank you so much as always for your time today.
Pleasure, Natalie.
The Dukascopy TV team will be keeping you updated on all of those figures and more, so do stay tuned. For now though, it's goodbye from me.